Welcome to this panel on green and clean, redefining finance for a sustainable future. I'm Mathieu, Dion, the Montreal bureau chief with Bloomberg News. So we are in Montreal, as we are all around the world. Now, with me today, I have beside me Grégoire Baillargeon. He's president with BMO Financial Group in Quebec. Mathieu Chamberlain, coming from London, from the London Metal Exchange. He's a CEO with the LME. And finally, Kerr, she's CEO with FinDev. In the next 3 decades, up to $194 trillion will be required in investments as the global energy system decarbonizes. That's a number we came out with at Bloomberg. Close to $200 trillion. Think about that. Conditions are chilly right now in the public markets, but that may shift. So my first question would be, and it's an easy one, on a scale of 1 to 10, can we globally achieve this carbon neutral target by 2050 to contain the global temperature increase to 1.5 degrees Celsius? On a scale of 1 to 10, what are your expectations? Let's start with Mathieu.
So I'm naturally optimistic, so I'm going to go for a 7 or an 8. And the reason for that, as I hope we'll get onto on this panel, is that I think there is now a critical mass of belief around what needs to be done. So clearly there are a huge number of challenges, which I know you're going to come on to, but I believe that we have jumped that first hurdle of believing this is something that we must do and something that we will be able to do.
Grégoire?
I'm a stubborn optimist as well, and I'm going to have to say 10 because I don't think it's a choice, it's an imperative. And if you sit in a leadership chair anywhere in the world, you have to focus on this. And if we're not optimistic enough to get to it, we'll need to get more optimistic and need to get to it within the next few years. So to me, it's not a choice.
And Laurie, you had a lot of time to think about it. So
Indeed. And certainly I'm an optimist, but maybe I'm not as bullish as an optimist. I put it between 6.5 and 7, not 7 to 8 or 10 for a few reasons. I feel like I'm on an emotional roller coaster as data comes out, as I'm sure most colleagues feel as well. On one hand, we know from the recent IPCC report that there's less than a 50% chance of reaching 1.5, so it's urgent. So that makes me depressed. But then we have to celebrate all the progress we've made, right? I mean, 25 years ago, we were barely talking about environmental, barely talking about social. Fast forward to Paris, a lot on mitigation, now adaptation and resilience, and we're talking about nature. So a lot of great progress. I look at fossil fuel subsidies, $723 billion in fossil fuel subsidies in 2022, greater than $1 trillion in 2021. More than $1 trillion in fossil fuel subsidies in 2022. Renewable energy subsidies, $200 billion. So I get depressed. But then Bloomberg New Energy Finance, I get optimistic. Last year, we spent more than $1 trillion in clean energy transition. So we invested as much in clean energy as we did in oil and gas and coal. So I get optimistic. So again, up and down.
I wanted to mention that. Thank you for taking my number out. No, just a joke. Just to quickly frame who you are in this conversation, how your organization can play a role in reaching this net zero target by 2050, Laurie.
Sure. So as was mentioned in the earlier video, so FinDev Canada is Canada's development finance institution. We support investment in emerging markets. We not only support private enterprise, but we also look to mobilize private capital, both domestic and international, in Latin America, the Caribbean, Sub-Saharan Africa, and with Canada's expansion into the Indo-Pacific and the Indo-Pacific region as well. Our investment decisions, in addition to being guided by financial return, are guided by our 3 impact goals of climate action, market development, and women's economic empowerment. So as a development finance institution, we're supporting emerging markets and developing economies in their transition.
And at FinDev, are you saying no to some requests sometimes? And is there a lot of requests where you're saying no to companies and helping them? Because they're not meeting the requirements needed, right?
Yeah. So where we are right now, so we have we were established in 2018. We're closing in on $1 billion of commitments in Latin America, Caribbean, Sub-Saharan Africa, as I mentioned. And we don't say no to clients. What we do is we actually support clients in their transition. So in addition to financing and investment and blended finance solutions, we bring technical assistance and knowledge, again, to help clients transition. This is really important within the financial sector. We're working with local banks and investment funds in our regions that we serve to help them on their sustainability paths.
So my question was how to play a role here. Maybe Mathieu.
Yeah, so maybe I can give a little bit of a sense for our journey, because I think it illustrates a number of the challenges that organizations are having. So at the London Metal Exchange, our role is to provide a venue for the trading of industrial-based metals. So obviously aluminum, which is particularly relevant to this region, but also copper, nickel, zinc, tin, lead, etc. And I think we really started on this journey of just thinking about ourselves. So, we're a pretty simple business. We have an office that has emissions. We fly quite a lot that has emissions. And you can look at your business in a very narrow way. And really what it took to wake us up was some revelations back in 2017 about some of the cobalt that was traded on the LME, where it was identified actually by I think the Financial Times at the time, that the supply chain for that cobalt was potentially at risk from having child labor violations. So sort of more on the S side than the E side. But that really got us thinking, and I think it got our whole market thinking about what it is to be a responsible business, to live up to those ESG requirements. Because you can either take a very narrow view that says that we're not doing anything bad, we're nice people, we would never do anything of that nature, or you can think of the ecosystem more broadly. And increasingly, that's what our stakeholders have been challenging us to do at the LME and across the metals industries and the commodities industries more broadly, which is to say it's not good enough to just say that you're not doing anything bad. It's about how can you be part of that positive solution? And that's got two elements. Firstly, the fact that we're going to need huge amounts of these commodities for the green transition. So how can we all pull together to make sure that we're able to produce the materials we need for decarbonization, but at the same time, to look at the footprint of producing those and making sure that we mitigate the costs so that we're not doing good by doing bad. So I think maybe just in there are so many questions, contradictions, challenges that we've had to think through, but it's something that we're really trying to address through the provision of data, through working with standards bodies, etc. And it's if nothing else, it is an intellectually fascinating journey.
And what about the Bank of Montreal?
It's interesting, and I'll carry on what Laurie was saying about optimism going up and down at different moments in time. And I think when I think of our journey at the bank and the consciousness that we've developed around the issue, the more you realize how difficult it's going to be, the more the optimism actually raises, because when you activate everyone, when you activate your entire employee base, when you activate all of your leaders, you realize that there is a lot of ingenuity, lots of creativity to do things. So what we've done at BMO to grow that conscience, we built a climate institute internally within the organization. And those are people that are focused 100% on the climate. They're not bankers. They're there to help us grow conscience, distribute knowledge, make sure that when new data comes out, that it's circulated, that we see and understand through it, both in corporate areas as well as in each of the lines. We push the climate ambition into what we call our purpose at BMO, and that's really the driving force of our entire organization to make a difference. So we push climate ambition to this. And then we pushed it into corporate strategy in each of the lines. So there are KPIs in each of the lines as to what are you doing on climate. And a bank is a very vast organization. It does a lot of things across the financial ecosystem. And we all know we need to transform everything. Therefore, each job that is part of the wheel of the economy in a bank is part of those solutions. So we need everyone to activate, find ideas. And when those ideas surface, the executives are receptive because everyone's aligned on consciousness. And what we've seen is it brought a lot of innovation, allowed us to be a first mover in buying. We bought Radical last year, so that's a carbon footprint advisory, carbon footprint, carbon project credit creation, carbon credit trading platform. Why? Because banks create markets for commodities. So we now have the tools to create a market around carbon to try and get it, properly factored in. So there's a lot of products that banks can push. And when you have that kind of conscious, not only you can bring new solutions to market, activate the competition to compete with you on those products and activate things, but you are a relevant player at the policy table, working with governments, working with the United Nations, and we have that privilege at BMO to be around that table.
Now let's talk about an interesting topic, which is called greenwashing. And could you give me a concrete example of greenwashing you have witnessed in the course of your activities? And just full disclosure here, I'm a reporter, so I'm looking for news. Or can you provide us with a definition of greenwashing to your knowledge? Maybe you can start with Mathieu.
So happy to do so. And again, I'll go back to where I started, which is as a natural optimist. I believe that the vast majority of businesses and people in business are trying to do broadly the right thing. So, of course, at the margin, you maybe have people who are pretending products are sustainable when they're not, or trying to cover up undesirable activities in their supply chains. But to my mind, the great concern comes not from that very small minority who are actively doing that, because that's quite easy to root out. To my mind, the real challenge comes from the differences in reporting and perimeters and scopes of companies and people who are broadly trying to do the right thing. Of course, they're trying to make their products look as sustainable as possible, because we all work to make our products look as attractive as possible. We're in a competitive environment. But the real challenge that you get in this space is the lack of consistency, the lack of standards, and therefore the difference, the difficulty in comparability. So I think a lot of the time that we talk about greenwashing, I think what we actually mean is that there isn't a single standard by which everyone discloses. And just to give an example, I'll go back into to aluminum, because aluminum is, as I'm sure people know, is effectively solid energy, right? The vast majority of the input cost into that product is the energy. And of course, consumers are really interested in what is the carbon footprint. But just looking at the process of making aluminum, are you going to measure just the energy inputs? Are you going to measure the carbon that's burnt off from the anode? Are you going to measure the cost of mining the bauxite out of the ground? There are so many different scopes and levels of transparency that one could apply. And so, as I say, I think when I think about greenwashing, my issue is it's not that very small minority who are doing the wrong thing. It's how can we bring comparability so I can genuinely say, I have a ton of aluminum here and I have a ton of aluminum here. What is the tons of CO2 equivalent per ton of aluminum? And I want to be able to produce a single number that allows consumers to make an informed choice. And that is really difficult.
And it's true what you're saying, because we have Bloomberg, a matrix, there's MSCI, Sustainalytics, S&P Global, right? So it can get very confusing, and you're looking at one company and they all say something different related to the company. So it's very difficult to make a decision. Maybe Laura, you want to talk about greenwashing?
Yeah, I couldn't agree more. And as you said, they're again celebrating the progress, right? Like there's so many different standards and taxonomies and guidance out there that making sense of it. What are the dimensions? How do you measure? What are the metrics? So converging on the comparability, 100%, and then the transparency and disclosure around that, so that the information is put in the hands to make investment decisions. So I completely agree. But one other point I'd like to make is we can't let perfect be the enemy of the good, right? As you've said, it's positive intent. What's the direction of travel? Are we going in the right way? Is there good faith behind that? And I firmly believe there is. There's a long way to go, but we're making huge strides.
Grégoire, maybe a word on greenwashing and how you see it, and maybe an example for us?
Yeah, I certainly hope everyone in the corporate world has now developed enough reflexes to make sure that rigor is in the process everywhere. We can't afford to make any kind of claims, because we actually destroy the landscape for everyone else to actually be, putting forward all the efforts that many corporations are making, because as soon as we put them forward, perfectionism gets in the way of momentum. And to me, that is the most worrying piece, because there are great intentions, there are great ideas, there are great initiatives in all sectors and all industries, and we see so many of them at BMO, and it's actually very encouraging. It's not fast enough, but it's very encouraging. But that is the beginning of movement that brings momentum, that accelerate things, and we all know that over decades we are sometimes surprised to see how much progress we make. We need to let progress get made. So I think we need both. We do need perfectionism out there. Radical views will change the world. They move things. It's important, and we respect that. But we need to allow momentum to happen. So not everything is greenwashing. Some things need to be celebrated, and we hope to find the right balance. I think it's going to be very important to get to the destination.
BMO, like other Canadian banks, has repeatedly been under attack by environmental groups such as Greenpeace, saying you've invested $25 billion in 2022. I imagine you have something to say about that number. But your financing support to the oil and gas industry, isn't there at least an appearance of greenwashing?
So definitely not from our perspective. As it relates to some of the numbers that float around that don't have much rigor, I'm not going to comment on the numbers. But yes, of course, we do finance the oil and gas industry, and we don't have any intention to stop that. The role of a bank is multifaceted. It's multifaceted. And one of the most important roles of a bank is to be a trusted, loyal partner for the economy to function properly. We are in a transition, and as long as for energy security purposes, for fairness in the world, I mean, this is the mother of all injustices, but we will need to transition out of fossil fuels into cleaner energy. And during that transition, yes, our bank will be part of that conversation. We're not going to hide. We're not going to run away and leave that problem to others. We're going to be at the table. We're going to bring the solutions we see throughout the world to our clients that have carbon heavy footprints. We're going to work together toward transition. So we're not going to run away. Is it greenwashing? I don't know that taking our responsibility as a proper actor in an economy is actually greenwashing. It's quite the opposite. We take it seriously, put a climate institute in place to understand how can we help those industries do their part and accelerate. So there's nuances, a lot of nuances. So it's important that we listen to each other. So environmentalist groups, I've spent a lot of time just doing listening sessions, not arguing sessions, just listening sessions, understanding their perspective and making sure we really sink in what they mean. We're pragmatic, we're solutions finders, and we'll work toward transition. So that's the answer. That being said, banks are multifaceted, as I said earlier on. So one portion is the lending, other portions are, in asset management. And the answer about what people should do about oil and gas is a very different answer. If someone manages a fund that has, a duration that is 50 or 60 year out, yeah, there's a legitimate question as to whether you should expose yourself to an industry we say should transition out. So it's a completely different set of circumstances than different types of asset managers, different places of the ecosystem, and lenders. And banks are a responsible actor in an economy that needs to transition everywhere. So that's what we're doing.
Thank you. Laurie, when you think about sustainable investments, what is your main concern? What is your most important fear? Or what can you share with us about that?
So around sustainable investment. So again, making investments that not just make a financial return, but are also sustainable is core to the DNA of FinDev Canada and many other investors. I think the biggest concern or fear that I have goes back to the question we were just talking about a moment ago in terms of comparability, making sure that we're kind of all rowing in the same direction towards sustainability. So that sort of, global standard understanding of the dimensions, the measures, the metrics is really, really important. I think one other aspect of sustainability, which was just brought up when we're talking about the energy transition, which is getting more and more spoken about, is around just energy transitions. And what is the just? So as you're saying, if we look not just in developed markets, but also in emerging markets, and we take a look at the thousands, the tens of thousands, the hundreds of thousands, the millions of families that are reliant on employment in oil, gas, coal, there has to be a sensible transition, a sustainable transition. So yes, we need to double renewable energy. We need to triple energy efficiency. To help make that transition, but we also have to make sure that there's that just part of the transition, and what are the employment opportunities, how our economy is going to transition to be able to support that transition away from oil and gas.
Mathieu, since we have you here, there were some regulations adopted in Europe, right? In 2021, I think. How's it been?
Yeah, so I think the work that the EU has done on the Green Deal and the sustainable taxonomy is, I think, firstly, we should acknowledge just how ambitious that intention has been. And I think the EU deserves a huge amount of credit for trying to take on this challenge, as we were discussing, about how can you standardize, how can you provide that comparability, how can you ensure that that greenwashing is minimized. And maybe just to, I'm not doing it any degree of justice, but a very quick summary, the sustainable taxonomy looks at these 6 key areas about climate change mitigation, climate change adaptation, biodiversity, water, etc. And then it gives you credit for making progress in one or more of those buckets while doing no significant harm in others. And then it allows that data to be used, for example, to classify investments. And we now have this idea of light green funds, dark green funds, etc. So, it is a hugely ambitious piece of work. And I think it's one of the best and most comprehensive pieces of work that anyone's done. Of course, when you are taking on a challenge of that scale, there are always going to be questions. And I'm sure you've seen a lot of commentary about how has natural gas been properly categorized? Has nuclear been properly categorized, right? Those are genuine debates, and you're never going to find consensus on them. But I think if you see it in the context of a piece of work from the EU where they are really trying to make the world better in terms of that data, the things we've been talking about, I think they deserve a lot of credit, and I really hope that the momentum continues behind that.
Grégoire, what is there to say about carbon credits? Is it working very well right now?
Like in the new markets, it's got ways to go to achieve what it can achieve. Certainly at BMO, we think it's a part of the solution. So as Antonio Guterres was saying, we need everything everywhere all at once. So this is certainly one piece. I mean, we all know that we have a carbon budget, whether you're thinking we're going to end within 1.52 degrees, or even if you go above, you always have a carbon budget to whatever your objective is going to be. So there's a finite resource there, and it needs to be priced. And we forgot to price it for decades. So how do we price it? So it's going to be carbon taxes in a bunch of jurisdictions. That's one way. But another way is, as everyone wakes up to that pressure that the voluntary markets are going to create themselves, or world as function in extraordinary ways around financial markets. We think the carbon markets will develop themselves. And when we think about it, there's all sorts of bad reputation that was developed around certain amount of carbon credit concepts, but simply said, this is one of the ways to bring fund flows toward decarbonization. What we're talking about is companies taking funds out of their profitability to actually route them to companies that have a project to decarbonize the world, whether we're talking about nature-based projects or about carbon removal with carbon capture and sequestration. So those are interesting tools we can develop to actually flow more funds toward those decarbonization solutions. And we all know we'll need them. So that's why we bought Radical. Radical is that firm that helps both the firms that have a carbon reduction or carbon sequestration project to actually develop the credits properly, get them properly documented, properly verified in a rigorous fashion such that they can withstand any kind of scrutiny over time. That's fundamental. Any new market will need that. And then they're there to help them trade and find the market with the buyers on the other side, corporations of the world that decide to offset part of their emissions. We are not saying that people should have set instead of reduce. That is not our thesis. Our thesis is quite the opposite. This is all corporations, all individuals, everyone should try to reduce their carbon footprint to the maximum extent, but there will remain something. In the current world, there will remain a lot because we don't have the technologies to decarbonize everything. And there still will remain a piece in 2050. So that piece needs to be removed. And we think the carbon markets are going to help accelerate that transition. So for us, it's an important piece of the solution.
Interesting. I want to address quickly greenwashing because it's kind of a new thing right now, which is deciding not to speak so publicly about climate. And I just want to provide some data here. So exchange traded funds with an ESG team saw a tremendous increase in 2021 to more than $130 billion. But in 22, capital flows dropped by more than half, and that's according to Bloomberg data. So the ESG label has been hit quite a lot by right-wing circles, and especially in the US. So greenwashing, is that a risk on the radar right now? I don't know who's willing to talk about that or give this perspective, but greenwashing.
Yeah.
Well, go ahead, please.
Nobody wants to touch it.
Very happy to have a go at that. So we certainly, and this is more in the context of commodities, but we haven't seen this become a major problem because I think there is a distinction between the data and what you should think about the data, right? The data is the data. It is scientific, it's quantitative, it's factual. What you as an individual choose to do with that data and the investment decisions that you make with your own capital or savings is entirely for you. And certainly we've seen that. I mean, let's look at the automotive supply chain. There are clearly a number of manufacturers whose end customers feel very strongly about a lot of these ESG topics, be that the carbon footprint of metal or the supply chains or whatever it might be. And for those, and particularly, of course, that's in the electric vehicle space, because people who are perhaps making a decision to buy an electric vehicle may have corresponding broader views on the ESG topic. That's very important to them. And therefore, there is a whole supply chain which is catered towards providing that certainty about the provenance of their commodities. There are perhaps people who buy other vehicles who have different views and different thoughts, and that's entirely fine. That's their decision. But it doesn't change the fact that we should all want to invest in having that data and making that available, and go and make your own decisions about it. And I think that this is part of the challenge, is that sometimes we perhaps go too far, and people think that we are telling them what to think, and that has never been the intention. All we've been trying to do is to provide the data so people can make informed decisions.
From my perspective, I think we're stumbling on nomenclature and the reason for ESG. So fundamentally, coming back on the climate and the environment piece, which is, scientific, unequivocal, we have an issue. That's climate risk. We have transition risk. That's enormous. Our corporations need to transition. Some of them may not survive this if they are not forward-thinking, finding ways to transition and be the thriving corporations of the future. So how do we handle those two risks? When you think about it, this is about, I said it's the mother of all injustices. So you need boards that have actually a lot of social conscience. This is about other economies, other people, humanity. So you need, if you want to be thriving in 2050, you can't forget about that. So a board that actually shows they care about social is actually quite fundamental to actually tackle the transition. And governance, well, it's pretty basic. We've got a world that's changing faster than ever, in part because of this and other things. Having governance that brings different ideas and different thoughts around the table is fundamental. So we're all talking about the same thing. We're all talking about risk management at a very risky time in our economies. So are certain corporations going too far? Are money managers going too far? Are they using the right nomenclature? So we'll stumble upon ourselves on the nomenclature. But I think fundamentally, everyone is there about managing risk and returns. And there's enormous risk out there, and we're trying to manage it properly. So I think there is a place, not of consensus, but of common perspective somewhere in the middle of this.
Yeah, I think you both said it really well. Again, there's individual decisions that we can all make as consumers and investors, roles in boards, roles as shareholders, and then what governments do as well. So at all these different levels, again, let's not let perfect be the enemy of the good. Direction of travel, we know where we need to get to, and let's move faster.
Do you think the new accountability guidelines by the International Sustainability Standard Boards, that's going to make a big difference? And I think it's going to be announced, I think it's this month, right? So is that going to be huge in the market?
Well, it's certainly huge. If there's one big risk ahead of us is the lack of regulation. So we talk about all sorts of nomenclature, being able to compare whether it's comparing carbon footprints all the way to comparing, the actions of different corporations at different points in time on different elements of ESG and all that. So having parameters, clear parameters, comparable parameters. And the first set of rules, it's quite amazing that we're moving that fast. I mean, too slow, but that fast. and are there going to be holes? Are there going to be problems? Are people going to stumble? Yes. And we're going to make it better and we're going to advance. But is it big? It's enormous. It's a big step in the right direction. And when we look back 5 years from today, it's going to look like a small step maybe, but it's a beginning of an important momentum around regulations and standards that is quite fundamental.
Europe puts money in decarbonization programs mostly, while in North America we talk a lot, I talk a lot about solar panels, carbon capture, electric vehicles, and batteries. So I want to ask, where is the capital most useful, you think, when these are two different kinds of investments?
Yeah, and I think most of us in this room sort of exist in countries with capitalist economies. So I'm going to arguably dodge your question, but I'm going to say that we have to let the market decide where that capital is going to go. So what I think is most important is that we have mechanisms in the market where behavior, be that decarbonization, or be that offset, or be that capture, or whatever it might be, can be properly priced and rewarded. So we've already talked about carbon credits and making sure that the price of those is reflective and that they are truly making the world better. But more broadly, if you think about everything in our supply chain, you can have varying degrees of greenness associated with it, right? Be it a commodity, be it an activity, be it whatever. And what I find interesting, and obviously we run a market, so it's naturally what we do, but what I find really interesting is this question of how can we make sure the right price signals are attached to those various activities and transmitted through the supply chain. So we already see that for, again, just talking about what we do, a number of metals, there is this idea of a green premium forming. Mm-hmm. Now, it's quite a nascent stage, so it's hard.
Well, there was a greenium before, right?
Exactly.
Discount.
Yeah. And it's actually, sorry, you make a really good point, which is that I think maybe we need to divide the ESG world into two. So this is how we see it. On the one hand, you have what are now we call the hygiene factors. So the things that you just have to do to be broadly globally acceptable. So avoidance of child labor is a very good example. There is thankfully now a global consensus that child labor is not a good thing. And if so markets like ours say that if you can't demonstrate that you have avoided child labor, then you can't trade the products in our exchange. And you're right, you would then have to trade that kind of product at a very significant discount. And hopefully that means that product is effectively discounted out of existence. And hence the child labor, acknowledging that the very good point that has to be a just transition. So you have to find other things that those families and those individuals can do. On the other side, you have the areas that I don't think are threshold conditions, and carbon footprint is an example of this. There's a lot of products that sell very effectively with having a high carbon footprint. So the way to send the price signal there is to start attaching a premium, if that's what the market calls for, to lower carbon products. And again, we're seeing that. We're seeing products being labeled and beginning to attract that green premium. And we're obviously very interested in providing solutions to help to quantify and trade that. So I really think that what we need here is a market-led solution where we can, as far as possible, attach price to ESG behavior, and hopefully that sends the right signals through the chain.
Do you agree on that it has to be market-led, entirely market-led?
So I agree very much. I think that there's also, because we're not moving fast enough, far enough, there's also a role for regulation. There needs to be carrots and there needs to be sticks, but I very much agree with that.
And if we think about governments, with the Inflation Reduction Act, which provides huge incentives for the energy transition, for for more capital in the energy transition, do we need governments to increase those?
Well, definitely. The role of governments is important on two sides. One is the regulation aspect. So, I mean, for one of the issue of our system as it is of course, when you're in a competitive environment, in a growth environment, we play within a set of parameters and rules. And you can, as an industry, whichever industry you're in, sort of nudge things and go to where you think the industry needs to go over time. But, you know, within the rules of the game, changes sometimes tough to do. And regulation can actually reset the parameters. And suddenly with the new rules, and we saw it during COVID, when there are new rules, we figure it out. So new rules are extremely important. The role of government is extremely important to accelerate change. And the other piece is incentives. Yeah, we saw what happened to solar over a long period of time, and it became, you know, an energy that is very, very cheap to deploy. Could it have been faster? Probably. More incentive faster would have actually resulted in more deployment, more scale into the systems, and therefore cost reductions and a faster deployment of the solution. So incentives are absolutely fundamental. And when we think where are places that are going to decarbonize, you know, the world faster, well, incentives can actually help there. And sometimes we talk about greenwashing, green hushing. For politicians, it's also very difficult because where are incentives most required? Probably in the higher carbon footprint sectors. So, my God, we can't subsidize sectors that have this kind of footprint. And the answer is absolutely yes. As long as it goes toward innovation and scaling solutions of the future, that's what we need. We cannot put all the capital on low carbon solutions. Then the world needs to transition. So we need to put a lot of capital to decarbonize the sectors that need it. And so when we often talk in these panels and about political courage, that's what it's going to take, because we're going to need to deploy a lot of capital, a lot of subsidies across the entire spectrum to get to the solution, and put regulations that are going to initially put everyone, you know, uncomfortable. But we're pretty innovative. We'll figure out our way out in the right direction.
I know you want to say something about the IRA. Is it? No? Okay.
No, I'm good.
You're good. You don't want to add anything on the top of that? It's a real disruptor in the market right now, the IRA.
Yeah, I absolutely agree with what you say. And I think if we take a look at emerging markets again, where FinDev Canada operates, the role of governments, the political will, it's compounded, right? So if the US is taking these forward, Canada's, you know, thinking about what it's going to be doing, et cetera, you take the political will in emerging markets, it's even more complicated. But I will say an example that came to mind, you mentioned solar. So in the early 2000s, Brazil, which is a hydropower dominated economy, the reservoirs are empty. There's El Nino, no water. And so the rationing that got put in place and the required energy efficiency measures that were put in place in Brazil did amazing things. And energy use, it took more than 15 years for energy use to go back up to the amount that it was before those regulated energy efficiency measures were put in place. So to move quick, like you said, like moving quick, sometimes does require that.
Is there a way to go even faster than we're going right now? Because we need to shift quickly. Is there any outstanding solution we didn't mention here?
Well, the most important part of all of this to me is a thriving economy. And there's all sorts of debate about growth around the debate, but fundamentally, in the situation we're in, we're going to need a lot of innovation. We need a lot of risk taking. We need new solutions. We need each industry to reinvest profits into solutions of the future. We need investors to have profitable investments to redistribute their capital into the system. This needs to roll. One of my largest worries is sort of the economic cycle we're in and the risks ahead about the stability and the solidity of the economic landscape, which will slow down all of these things. And if you have initiatives in each of the corporations for which you work, suddenly, budgets gets constrained and new initiatives don't get their budget. And suddenly solutions that could have been brought forward are not brought forward. We don't have time for this. We need to So it'll take a lot of courage also from investors to take risks despite an environment that's a little tougher out there. So what we need mostly is a strong economy to actually be able to go through that phase of the next couple of decades here.
So higher interest rates, higher inflation is somewhat bad news. That's what you're saying.
Well, high inflation is not the solution, certainly, and higher interest rates is not great either. So, we're navigating through that all together. Hopefully, we'll land the plane very quickly and start investing rapidly in each of the solutions after that.
Right now, today, where is the boundary between sustainable finance and traditional finance? And you both may be great witnesses of that. As we want higher yields, and maybe betting on sustainable investments is just like providing higher yields on the long term. Like I think since over the last year, the S&P 500 index is up 12%, while the S&P 500 ESG index is up 14%. So do you think at one point there's just no boundary anymore between sustainable finance and traditional finance?
Certainly from my perspective, I think that boundary has already been blurred, if not obliterated. Certainly in Western markets. If I look at the conversations that I have with the banks who are active in our market, so as you know, many banks, particularly Canadian banks, very active in the commodity financing business. I cannot think of the last time I had a conversation with one of those banks where we were not talking about how to ensure the sustainable credentials of what was being financed. I gave the example right at the beginning about conflict minerals and child labor, etc. And when a story like that emerges, the first people on the phone to us are the banks who are very, very concerned about their capital in any way going to finance those kind of activities. So I think the banking sector, we don't often praise the banking sector, but I think the banking sector actually deserves a huge degree of credit for being very much at the forefront of this, putting the resource into thinking about what their future loan books are going to look like, and then holding players like ourselves to account that if we're doing the wrong thing or we're not doing enough of the right thing in terms of disclosure, data, etc., explaining that it's going to be very hard to trade on our market. So I really think, to my mind, that boundary has already gone away a large extent.
Is there still an alpha opportunity here?
Well, if sustainable finance means innovation into financial solutions that are going to tackle the crisis ahead, it's going to continue to innovate, and there's probably a distinction to it. And given the size of the opportunity and how much capital needs to roll, there is probably an alpha concept to it. There's a moment we've all seen these markets. At some point when momentum really gets carried away, there should be extraordinary value in those kinds of investments. But the destination necessarily is just one and the same. Finance needs to be sustainable, like everything else. The world needs to be sustainable, so that's the destination, and financial products will need to find their place in it.
My few extra. Were you going to add something?
No, I was just going to say. I think it's the same. I feel it's the same globally. And if I go back to the first comment I made, 25 years ago, there was barely an E in the conversations around lending and investments, and we've moved that far over 20 years. And now that in the last decade or in the last 5 years, really the climate conversation has really pushed that even further. So I think it's an order of magnitude greater and stronger, and we're not having any conversations even in emerging markets with clients that aren't thinking about this, what to do about it. That's where there's information asymmetries and what are the pathways, but it's part of the conversation, it's part of the dialogue 100%.
I have an extra question here. So according to our energy transition unit, Bloomberg Nef, you mentioned the number, thank you for that. So energy transition investment, just to recall it, increased for third straight year in 2022, topping $1.1 billion, $1 trillion. That's right, a trillion?
Trillion.
Yeah. That's from us, and I should know that. Europe and Asia are leading the way right now. Why is North America lagging, you think? I like tough questions, journalist. What do you think, like, North America is behind Europe, Asia on that number?
Well, my answer to this is always conscience. So that means our leadership teams, that means our markets, that means our people have not developed the same level of conscience that maybe other markets have about a crisis that's in front of us. And that's always my sort of closing remarks on any of these conversations is this is our responsibility to grow our conscience on these things. And when we think we know the facts, we need to dive deeper and understand them a little bit deeper. No leaders should just rely on teams briefing them on what the IPCC synthesis report of the last few months was. You should take and read it. It's not that long, but that's part of a journey that all leaders need to do. And I think when I follow a lot of stuff out of Europe, because to me it's pretty clear that any kind of regulation that's coming here are essentially the ones that are in place or getting in place in Europe, and they're a couple of years ahead of us. So North America needs to catch up. It's important. It's essential, as a matter of fact. So all I can say is conscience. That's the only thing that is drawing us back.
We still have 4 minutes to go. Anything else you want to add on the top of what we've talked about and people should know about? Or we did a pretty good job.
Yeah. But I would just go back to where we started, which is that I think there is real cause for optimism because the conversations are happening, and not just conversations happening, a huge amount of work has happened. Again, going back to this question of the proliferation of standards and the difficulty of comparability, that's a problem. But as we said, it's because there are a lot of organizations who care, and a lot of organizations who see it as a commercial opportunity, which we also shouldn't have a problem with, right? This should be something that people commercially want to be prosecuting. Just look how many startup companies there are in the ESG data space. That might make it more complex to compare. It may make it harder to navigate the data, but it certainly means that there's an ocean of data out there that is accessible. So, I would just reiterate that optimism. We can't lose focus on it. But as I say, it's an element of every conversation that we have right now, and that's got to be a good thing.
Are we in the...
No, I was just going to add, bringing it. You talked about North America a moment ago, or we talked about North America a moment ago. Again, bringing sort of in the emerging markets view. So indeed, renewable energy, energy efficiency, energy transition solutions. We can't forget about the 675 million people that actually don't have access to electricity that are in emerging markets, and the opportunity for them to leapfrog and use renewable energy in distributed manners, I think is really, really important. So as they, get access, that's a huge opportunity there as well. Stop burning kerosene, dung, et cetera, clean cooking. This is a huge part that often doesn't get talked about a lot in the energy transition conversation, but it's a huge part, and that's part of the just as well, in the just energy transition.
Well, the last piece I would say, we didn't talk much about it, but it's all about that. It's collaboration. In the end, we saw it during COVID when we actually all get together, vaccines, get, the new record of development. Here, we need industries to get together. I mean, there's all sorts of alliances. There's all sorts of, net zero pathway alliances and so on. These are fundamental. We need to compete where competition is actually going to drive innovation faster. And we need to collaborate when sharing knowledge is actually going to... We don't have time to wait. So collaboration, I think, is a great piece of the solution. And I really hope, and we often say that at BMO, that we've had the privilege of being rated the most sustainable bank in North America and the number one by the World Benchmarking Alliance at COP27 out of 400 financial institutions. And I often say I'll celebrate that they were last. I mean, we're going to push the machine as fast as possible. And when everyone's better than us, maybe we'll be at destination. And my CEO and me have been saying it, we'll give the blueprint to anyone who wants it as to what we've done. And I've essentially said it on stage, but let's collaborate. Let's find solutions that if someone else has a better idea, well, we'll probably copy it 2 months after and the world will be better for it. So let's collaborate as much as we can.
It's an excellent point. It's a sort of a public-private partnership in an unprecedented way.
Yeah.
Are we in a revolution?
I hope so.
Precipice.
To be as optimistic as I am, we better be.
So I started out at 6.5 and now I'm at a 10. So thank you.
There we go.
That's what we need.
Let's hope you guys are at a 10 also. So thank you, Grégoire Baillargeon is president with BMO Financial Group. Mathieu Chamberlain, CEO of the London Metal Exchange. Thank you for making the trip. Laurie Kerr, CEO of FinDev Canada. Thank you so much for this panel. It was very instructive. Thank you so much, everyone.